Happy Monday, everybody. This is your mortgage market, and I'm Chris Bettis from Fluent Mortgage, Market Fluently. Oh man, what a week. I'm labeling this episode bipolar just because we just saw it twice, right? Like from the presidency, the strangest thing is, and most would agree, hey, help us, some sort of stimulus package, right? Because of COVID, the last year, how much pain there is for so many people. Great, almost $2 trillion with a T. Here's a whole bunch of money. So here's the bipolar part, right? And then right after doing that announces, hey, I'm going to do the biggest tax hikes in like 30 years. And I'm going to take it all back from you plus a whole bunch. So here's a bunch, but I'm going to take more of it back from you. Bipolar. So we just watched the same news from the Federal Reserve, right? A really well crafted given statement by Powell on Wednesday from the Fed, right? Calming markets, status quo. We're going to keep this economy propped up. Everything's going to be okay. We're in positive movement trends. Like, man, this horrible recession, like we're going to make it through it okay, right? It's going to be good. Status quo. And then they started dropping hints they weren't going to extend SLR. So on Friday, the announcement just came, right? Okay, bipolar, here we go, redo, do over, like bipolar. So here's the bipolar part from the Federal Reserve. So reiterated, we're gonna buy $120 billion in bonds every single month still to keep interest rates down, to keep the economy moving, to keep the biggest segment of it, real estate, et cetera, flowing, moving, good, smart. But what we're also going to do is we're not going to extend SLR. You know, I've been talking about this for a couple of weeks, the biggest fear that nobody was really talking about. Well, they didn't extend it. What is that going to do? That's going to force sale of almost $1 trillion by banks from their balance sheets to free up liquidity. So again, the Federal Reserve is going to print by $120 billion a month of bonds so they're buying it, but at the same time, they're going to force the sale of $1 trillion. Like, what the frick are you doing? At the same time, bipolar. So, okay. So bottom line, in terms of reports for the week to watch out for. So tomorrow, new housing, today already came out. Housing is up from last year at this time, but down considerably from January, down like 6.6%. Inventory is down like 30%. Tuesdays will be new home sales, and then Friday is inflation. So that's a major thing. So predictions. SLR expires in officially March 31st. We should see interest rates steadily start to increase even more than they have been, just like I'm showing the chart here, which they have significantly 0.5% to 0.625% already this year. So expect to see an increase in interest rates until if there's no more stimuluses later this year, we're going to see the economy is nowhere near as good as they claim it is. You can't have this much loss without a propped up economy. And when you're bipolar, you're going to erode the very things that you're trying to establish. So my prediction is we're going to see rates go up pretty consistently starting March 31st, a bit. But then again, I hope I'm not right about the economy, but the economy does what it appears like it should do and get a lot weaker as a lot of the stimulus comes through and then finally comes out of fruition. Then we're just going to see the economy sort of slip and they'll have to drop rates again to sort of help out. So hope you have a blessed day. Hey, no matter what, the right opportunity. So how are you going to leverage this? We've talked about in the past. Won't give away the secret sauce every single time, but there's so much opportunity today. I'm excited to capture it for my clients. Hope you have a wonderful day.